Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, December 13th, 2022. Let's take a look at the charts. Once again, we're falling into this band of long-term channel support between 165.87 and 173.98. This is basically Monday's trade you see here. Yes, it's a weekly chart, but we've only had Monday to trade, so there you have it. 165.87 to 173.98, still able to contain selling through Q1, and from here we can turn higher into the 230s over the next month or two and into the 320s as we move into Q3, Q4, or at least later Q2 of 23. So that is all big picture. This is a one-year channel bottom, significant long-term support. So before I jump more into the charts, I just want to encourage you to please click like. I forgot to do that at the top. If you would click like, that helps us out a great deal in being found on YouTube. Also, subscribe to the Wicked Stocks YouTube channel to provide you notification each and every time new content has been uploaded to our Wicked Stocks YouTube channel. That includes the daily Tesla report and the daily Apple report, along with other occasional videos. And if you would share the content with friends and colleagues, much appreciated. So, as I say, bottom picking territory we're in right now, whether that means for the week itself, for the month itself, through Q1, or perhaps even into later 23. Upside today, important level at 180.96 can contain session strength, and if we settle above this channel structure today, we should within 1 to 3 days reach this 195.52 level. This is a combination descending 1/3 speed line off the August high and channel top off the October high. It can 195.52 contain buying through next week, and we can fall off from there. But if we close above 195.52, we should, I'm going to say, within 3 to 5 weeks reach this 239.84 long-term speed line. So, I'd mentioned a moment ago how testing long-term support in the 165.87 to 173.98 area will keep the 230s in reach by the end of January, end of February, somewhere in there. And as I mentioned a moment ago, closing above 195.52 over the next few days should actually yield 239.84 by the end of January, where we can top out on a monthly basis and fall off from there for a month or so. And then, of course, closing above 239.84, we have about a 3 to 5 month objective or sooner into the 320s, but way ahead of myself on that. Bottom line I wanted to just show is that 180.96, meaningful day resistance, able to contain daily buying pressures. This good day trade level. And if we close above 180.96, good swing trade up to 195.52 over the following 1 to 3 days, where once again, that's a 2 to 3 week swing trade, or at least a 1 to 2 week swing trade, where you could sell 195.52 and follow it back into the 160s, 170s over the days to follow. And once again, closing above 195.52, the 230s, the upper 230s up here, you can imagine how that would only take about 3 to 5 weeks or less before we run into serious overhead trouble. Now, downside. Breaking or opening below 165.87, this long-term channel bottom does indicate 160.81 intraday. 160.81 is just a near-term channel bottom. This is the daily chart. This goes back about a week and a half or so. 160.81 you can see here as an intraday support level. You could consider this a daily support level. It might contain selling pressures for the day itself. I will say that if we settle today 164.21 or lower, that is a 1% violation of 165.87 long-term support. We may well reach 147.06 by Friday's close. I'll say that if we settle today below 160.81, it is highly likely that within just 2 or 3 days we fall to 147.06, where we could bottom out for the week itself. 147.06 is nothing more than a simple trend line off the lows from earlier in the year. And you can see how closing below 165.87 by the 1% margin of 164.21 will keep 147.06 in reach as a late week target. I've got 166.03 here. You see that's a daily support level. I'm using the weekly support all week long, but you can use these if you like for your own trading purposes. As I've said earlier, if we settle the week Friday below the 165.87 formation, by a 1% margin, 164.21 or lower, we enter another phase of meaningful selling that should play out well into January. And under that scenario, I would anticipate the next descending channel structure in the 109.97 to 121.67 region. This could take 3 to 5 weeks. It could take the better part of 2 months, but it would become our next target, and it's dropping at a pretty steep rate. You can see that by July, this structure actually moves back down to the March 2020 COVID low. I will say that if we do close the week not only below 172.94, the 5/8 Fibonacci, not only below 179.83, the neckline of this long-term head and shoulders formation, but more notably below 165.87 to 173.98. If we settle the week below this zone by a 1% margin, while I am anticipating this as our next objective, in terms of long-term investing in Tesla, not a big fan. I would then want to see this market push back above the lower 170s at the end of a week to sort of neutralize that continued longer term heavy dynamic that I think could play out well into 23 if we close below 165.87 this week. Until then, 165.87 to 173.98 remains our bottom picking zone of long-term support, and above which 195.52 is likely by the end of next week, the upper 230s by the end of February, and the 320s perhaps this area as we move into Q2, Q3 of next year. I think that pretty much rounds it out for Tuesday's Daily Tesla Report. I'll be back tomorrow with Wednesdays, and you have a great day.